Morning, everyone. Welcome to Cardano Q&A. So exciting times in Cardano land, as ever. We've had some exciting news this week that I'll dig into a little bit. First off, as we do a more of a workshop than a preach, although I do plenty of that. Has anybody got any questions, any burning issues around Cardano, crypto in general, wallets, staking? Up for answering anything. If not, I'll dive into my few bits of news. So, I can get my screen sharing. As we've been sort of covering little bits of news on Mehen, which is the minters of the creators of the fiat-backed, 100% collateralized stablecoin on Cardano, community-based, funded through Project Catalyst, and by community members who've been in the space for the past, well, certainly I know for the past 3 years, working hard on developing things. They have been called Mehen up to date, and they're now in the middle of a rebrand, as is fashionable these days, it seems. So Mehen are becoming W3I, as far as I can tell. There is some kind of parent company and substructures being set up, but W3I will be the sort of working title for the company that's actually creating the stablecoin, USDM. And USDM, the token itself, is getting a new icon as well, a new graphic. So this is a sneak peek at the new branding for Mehen. The M, I asked about this. The M is staying. So it stands for something. They have not clarified whether it stands for Mehen anymore, though. So what that is yet to be announced. But as part of this whole rebrand and growth, they're continuing to roll out state by state in the US, and certainly business corporate investors are now able to mint USDM. Fluid 7, my UK-based company, is in the process of getting KYC'd and AML'd so that we can actually mint stable coins as well. The process has been pretty good, but they're not quite prepped for every international address yet. So they're still working a few kinks in their KYC process. So once that's done, then Fluid 7 will be able to mint US dollars into USDM. And the last couple of weeks, we've been touching on the liquidity in Mehen, and that was doing fairly well. Now we've taken a nice big jump. So we sort of were at the 100 mark 3 weeks ago, 250 last week, and then this last, or 500,000 last week, and this last week we've jumped up to 1 million. So they've got $1 million US now in the stablecoin after about a month of being live. So the direction is healthy, and that bodes well. So now I talk about Mehen because I do see them as a really high value player in the space. Very early days yet. So if you want to look at them as an investment opportunity, then certainly that's something worth doing some due diligence around. This is a minting platform. At the moment, it is effectively free to mint USDM, but there's a large fee for burning it. So the encouragement is to get the liquidity into the ecosystem rather than allow it to seep out again. But if you are participating, a few ways to take advantage of the stablecoin. So on the DEXs now, there are starting to grow some pools that offer some good rates of return if you're into providing liquidity. So this IAJ USDM pair is getting you 20.67% in yield farm rewards, which is, it's difficult to find that in the bank for your US dollars. And the assurance with a fully collateral backed stablecoin is that you can always redeem one USDM for $1 minus the fee, of course, at the moment. But if you are looking to hold dollars long term, then getting into a stablecoin, earning some yield off them is a very stable, secure way of doing so. And if you're picking a pair of tokens that is not very susceptible to impermanent loss, then that's particularly good. So there are pairings of two stablecoins on Cardano ecosystem now. So you could have like IUSD, which was a synthetic collateralized stablecoin, with a USDM fiat collateralized stablecoin. Pair those, and then both are pegged to the dollar, so you're always very likely to get your dollar back out again. One of the DEX is Sunday Swap, I think, is even offering a higher rate again. So they're still going. USDM, that over the past 24 hours has yielded 50%. That's on an ADA USDM pair. So if you are a liquidity provider and into yield farming, then that's something well worth a look. Another part of their efforts is all around creating a company that is tokenized, effectively bringing their shareholding into the blockchain space, so that any investor can take part ownership of the business of USDM. I'm going to call it USDM for now because I'm not entirely sure what relationship Mehen and W3I and whatever other companies are being formed at the moment hold in the ecosystem, but you can have an ownership, partnership, tokenized ownership of the company that is controlling the stablecoin. So that will be a very potentially a very good investment to make. Particularly if you look at the large fiat-backed stablecoins in the wider crypto ecosystem, like USDC, Circle, and Tether. I don't even know if what the share situation is with those businesses, but if you can get shared in a company that is responsible for a whole load of, or the major liquidity of fiat-backed stablecoins on any ecosystem, then it tends to do very well because the flow of money is toward the blockchain space at the moment. Has been since inception rather than away. So you're in a growing ecosystem, one you can take advantage of. Good. So that was Mehen. Nice little update. Great to see them doing well. And the team are working hard. A very, very small team working really hard to get this stuff out there. So kudos to them. They do have proposals in. No, actually, I don't think they have any proposals in Fund 12 of Project Catalyst. So you could have supported them certainly a couple of rounds ago, but I don't think that's anything right now. And if you want to keep up to date on the latest, do go and subscribe to their newsletter. I'll grab that link for you if I can. Yeah, and that will let you subscribe to the newsletter. And that's the best way to keep up to date on their news. Can I grab that? Good. Okay, I'll see that into the Discord as ever after the chat. We have a record of all the links I talk about in any of the calls, so you can always go back and revisit them. I have updated the last few weeks of recordings up onto YouTube as well. I was a bit behind, so they're now up there as well, so you can catch up on anything you've covered in the past few weeks. So, as Luca touched on in his call, there's been a big bit of news out of Cardano Foundation. Adverts. So they've now signed a agreement with the nation state of Argentina, and they'll be providing education, providing blockchain infrastructure, and once these adverts are over, this is a video I recommend you go to get the best news on all this. By Dapp Central, Farid does a really great job of bringing news. Very clever guy, but is able to communicate really clearly. He's US based. Don't hold that against him. And you can have a really rounded overview of where Cardano is in terms of being adopted as a, it's certainly heading towards being a legal currency in Argentina, recognized currency in Argentina, and also providing blockchain infrastructure for their governance, potentially being a voting system. We know that there are states within the US that are talking to Cardano Foundation as well about using Cardano technology for voting mechanisms. And so really the governance, the hardworking governance that Cardano is doing the last few years, and particularly in this year as we enter the era of Volterra, being borne out in the recognition within the challenging space of global governments, which is very exciting, very cool, very bullish for Cardano as a whole, because ultimately Cardano's value proposition is as a utility chain. It's got use in bounds, and where the token certainly at the moment is not appreciating as fast as other altcoins, as they're called. Cardano has got a whole big wave of price action to be seen, and a whole wave of technology to offer to the world that really doesn't get the kudos it deserves. So yeah, don't ignore Cardano, certainly. Even another bit of news, a bit of an aside this week was there was a bit of a to and fro spat between Ethereum's largest podcast and Charles Hoskinson. That podcast has traditionally been really brutal against Cardano, like talking about it as having no adoption, no developers, no value. And that's been their take all the way through. And they're still sort of maintaining it, but they sort of appeared to offer an olive branch in terms of inviting Charles onto the podcast. But when he counter offered for them to come to an ecosystem event to hold a podcast to record it, they said they wouldn't. So that's a shame, because really Charles can't go into an echo chamber where he's just fighting against Ethereum maxis who hold a narrative. They just deny facts. So he wants them to come to an event in the real world, Pure Evo, which has thousands of people visiting in Las Vegas, to all interested in purely in Cardano. So that's where he wants to hold a podcast if it's going to happen. We'll see. At the moment, it's not looking too hopeful, but that would certainly be a good bit of interaction between our two ecosystems. So the Argentina news continues to grow. This video here by Farid is the best way to get the bulk of the community of the news from a community perspective, rather than take it straight from Cardano Foundation or IOG's house. But both IOG and Cardano Foundation are active in the country at the moment. In end of the year, is it, or might even be early actually? Dancing in my mind, August now, thinking about it. There's going to be the constitutional convention for Cardano, where we effectively sign the constitution of Cardano, ratify it, and agree that that's the sort of the playbook for Cardano going forwards, for Cardano governance going forwards. And that will sort of lead on to a whole load of technological updates that will be coming into the chain. So this document from Intersect is well worth a look as well if you are interested in governance on Cardano. We're entering the phase where we're doing final testing on a whole load of utility in the developments been going on around the Chang hard fork. which is coming up this year. That will be the next hard fork that Cardano does, and that will suddenly release a whole load of governance utility into the blockchain itself, which will mean we'll be able to forge voting structures to actually carry out upgrades to the chain itself, to the blockchain parameters themselves, all from the hands of the community. So, as I've said in previous calls, there are 7 Genesis keys which control decisions around parameters on Cardano at the moment. Those keys are distributed between IOG, Cardano Foundation, and Emergo, 3 founding entities of Cardano. Those keys are being handed over to the community in terms of a constitutional committee. There'll be an interim constitutional committee, which will have 7 seats to start with, but that's going to grow over time, and will eventually be elected. Until we've got the governance tools on the chain, we can't elect our constitutional committee, so they're being sort of just voted in a more of a Project Catalyst type way at the moment. We'll have the Intersect members-based organization. We'll also have Pragma, which is another members-based organization. And we'll have the delegated representatives themselves, which will be anybody and everybody who's an ADA holder, who can hold a position of influence in the Cardano space. People who see them as a figure of trust can apply their vote power to that delegated representative, who will then have the ability to make decisions on behalf of lots of people within the ecosystem. And that governance infrastructure is being set up, and the management of it, the facilitation of it, is being written into code, immortal code on the blockchain through the Chang hard fork. And then the Cardano improvement proposal process will all start to be managed through on-chain decision making, which is where we need to go for. If we're ever going to see governments adopting Cardano as a voting mechanism for their nations, before that we've got to do a whole load of managing, dog fooding our own technology, and actually running the chains, full decision-making process on chain. And we are heading into that territory now. So this document is detailing a bit of the timeline on where we are and what we've seen so far. So testing April and May. We're heading into June. Now we just had another stake pool operator call yesterday that was detailing some of the upgrades that are coming within the chain itself, outside of governance. One of them to do with good use of resources for the blockchain node itself. And we're going to have a hard drive based index rather than a pure in-memory solution. And that will decrease the amount of memory requirements for the blockchain nodes going forward. So at the moment, after Chang hard fork, we're probably looking at about an uninhibited node needing about 18 gigabytes of RAM. By introducing this hard drive based chain index, then we'll have only a requirement back around 8 gigabytes, which is great because that makes it much more accessible in terms of managing nodes themselves and in terms of driving decentralization. And certainly you want a low barrier to entry in terms of hardware requirements, because you can't build and run expensive hardware in developing nations as easily as you can in developed nations. And if we're really going to see a decentralized, distributed, fair and equal playing field, then we've got to keep our costs low in terms of operating nodes. We'll be heading into, I'm just checking to see it on here, when the constitution is going to be ratified. I can't see it on here, but I imagine it'll be towards the end of the year, probably December time. And in the meantime, we'll have lots of phases of getting this technology live, rolled out, tested, with some votes in beforehand, I imagine, and then we'll head into the real nitty gritty of decision making as a global community of thousands of people. We'll get into that in the new year, I imagine. Yeah, this document, I'll drop a link to it, and you can have a read through all the technical details, the real deep dive on the governance changes that are coming to Cardano. But yeah, exciting stuff for me, certainly. Maybe as a quick aside, Fluid Pool itself is doing well. So at the moment, we are recipients of the Extra Small Stake Pool Alliance rotating delegation, which is where stake pool operators, primarily stake pool operators, get together and help other small pool operators by delegating some ADA into a rotation schedule. And by doing that, they receive that bulk of that delegation at intermittent periods throughout the year. So at the moment, we're recipients of that rotating delegation. So we've had about another 500,000 ADA added to the pool. And we were over 1 million up until yesterday, I think, ADA again, which is great. So we've had 2 blocks minted last epoch and this one. And once in a couple of days, we'll have next epoch's schedule, and we'll be able to see how many more blocks we'll be able to get. So your rewards will even out over this period while we've got the rotating delegation, and then unless we get the level of delegation up again, then that will sort of go back to the bit more volatile staking rewards. Kerry, you got your hand up.
Morning, Jonathan. Morning, everyone else on the call. So technically, how does this work? So once you're eligible for your stake, does that actually get converted into fiat? Is it exchanged on the network? Does it get staked? And then you've got certain privileges. I mean, how do you monetize it essentially?
Great question. So the Cardano staking system is the best around. Effectively, you are doing it all in ADA. So in terms of buying ADA, you can do that on your exchanges or centralized or decentralized, if you have that ability in other currencies. Then once you hold ADA, it sits in your self-sovereign wallet, and you can stake it by signing a transaction on the blockchain itself. Once you've signed that transaction for that wallet, any ADA within that wallet is staked in completely liquid staking. So you can move it out of the wallet, you can spend it, you can increase the amount, you can decrease the amount, and the constant balance of your ADA in that wallet receives staking rewards in perpetuity. So once you've earned your staking rewards, or once you've started staking, sorry, you'll effectively have the end of that epoch that you staked in with no rewards, and then you'll have one full epoch after that, which is a 5-day period with no rewards, and then from then on you'll start earning your rewards. And if you want to relinquish your, you pay 2 ADA, I think it is, to start staking, which is like a deposit on chain, and you do get that back if you ever relinquish your staking key. But yeah, you might as well just hang on to it forever. Is my take. And the staking rewards are accrued daily, so you'll have staking rewards added to your balance, sort of minute by minute, daily, and then each 5 days at the end of that epoch, you get your rewards given to you. So once you start taking this sort of a fortnight, 10 days before you start earning stake, but then you do it from then on. And there's nothing more you have to worry about. Spending your ADA, moving your ADA around is not an issue. It's not locked at all. I mean, you just earn the underlying base rate of the blockchain's rewards. Now, it's a very good system. However, there's lots of discussion at the moment around the level of return. So at the moment, you're getting at best about 3% APR on your ADA. And most people agree that's not really strong competitor to the other chains out there and the rates of staking rewards you get from them. And so it's probably not a factor that's bringing people into the ecosystem alone. People aren't coming in just for staking rewards. Once you're here, then it makes sense to go and grab them. But yeah, it's not an attractive factor in itself. So we're looking at ways of increasing rewards as a community. The way that I would like to see it done is by actually having alternate earning mechanisms from the decentralized finance infrastructure that we're building. So participating in DeFi protocols are where you get the bulk of your rewards rather than at the staking base layer. Because when you're looking at staking rewards, effectively, you're looking at inflation. So you're spending some of the ecosystem's ADA to reward and encourage people into the ecosystem. And that's not real value added. That's not bringing in additional people into the space, additional fiat into the space. And so I would rather see the rewards coming from private entities being creative, engineering great tools that allow you to earn greater rewards, like the lending borrowing platforms that I talk about, or the locked staking platforms. So you can either you can put your ADA into a smart contract rather than just having it sitting in the natural protocol, native protocol. And then once it's in a smart contract, that's when it's participating in a sort of DeFi layer that can increase your returns, because that ADA is locked and can in fact be used to do other things within the ecosystem. One of the largest, sort of most, certainly the one that bragged the most, DeFi protocols that is on the way is.
So, sorry, Jonathan, just while you're busy with this, I don't know if you fully answered my question. So I understand the staking part, and obviously some questions around that. But I think my question, unless I misunderstood you, so how is the ADA utilized internally on the network in terms of furthering development or whatever the case might be? So if you become let's say a Fluid now, for example, you're saying that Fluid's one of the, and excuse me on the terminology, but let's say you're essentially beneficiary of a certain amount of ADA, right? So that has been staked, or it's accumulated partially through staking, and it's kind of it's got access to this pool of ADA. But does it physically spend the ADA? Does it turn it into fiat to say, okay, well, we need £100,000 to appoint a developer or a team of developers to do some stuff, or we need to write some white papers, or there's physical work that needs to be done and people need to be remunerated? Or is it a simple case of just moving ADA around and then remunerating people in ADA? Like what's kind of what's the ecosystem look like in terms of basic economics?
Mm-hmm. So it's a proof of stake blockchain. So everybody that participates in the chain is given the opportunity to stake their ADA with an individual or a collective of pools. And by doing that, you are voting for that individual as a good operator in the space. So that's the ultimate goal of the proof of stake blockchain, is that you're choosing with the asset that you've bought to decide who is a good operator in space and who can be trusted to run nodes, to run the infrastructure for the blockchain itself. The rewards themselves are then generated. So you're earning rewards from the blockchain. The blockchain is paying you for making that voting decision, making that choice with who you're staking with. And the ADA there that's given, that creates the rewards, is taken from the transaction fees on the network. So like Ethereum, like ETH is to Ethereum, it's the primary token for the chain itself. ADA is to Cardano, and so all gas fees on Ethereum are paid through ETH, and on ADA we don't have gas fees, but we do have transaction fees, and it's a predetermined cost. So every transaction that happens, your cost in advance before you do it. So there's no fee market for our ADA, so the price doesn't fluctuate massively like gas does on Ethereum. And when the chain's congested and Ethereum gets very expensive to use it, Cardano stays the same price. But every transaction that happens, 20% of it is carved off into the treasury. And out of that treasury, which is sitting around $1 billion, the staking rewards are paid out. But they're paid out in ADA, so you're earning more ADA on your ADA. Does that cover your question?
Yeah, that makes it a lot. That explains it a lot better. Thank you.
Cool.
So this 981,000 ADA, or 981,411 ADA under the fluid pool. What essentially is that? Is that 61%? Or yeah, maybe just explain that in terms of the whole mix of what we're looking at on the screen here, if you don't mind.
So yeah, so for fluid pool, this is a number of people who have decided that fluid's a good pool to stake with, and so that's a number of individuals who are staking their wallets, or number of wallets being staked to the pool. Within those wallets, the total balance is 981,000 ADA. So that's effectively the portion of ADA in the world that's been voting for Fluid Pool to be an infrastructure provider. They've made their decision based on me, whether they trust me to be doing a good job, and whether they're coming through any of my education, like this call. They are looking at the economic returns that they'll be getting from the pool itself. So they know that the base layer of interest earned across the blockchain is about 3% at the moment. Each individual pool, so this first figure, the saturation, each individual pool, stake pool that is, can hold a maximum of 63 million ADA. So we've got 1 million. The most we can ever hold is 63 million in this one stake pool. And so we are 1.3% saturated. So we can't grow.
You can't grow beyond 100%.
Beyond, we can actually practically grow beyond 100%. So if we had 75 million ADA staked to the pool, that's perfectly possible and allowable in the blockchain itself. But what happens is there's a disincentive above that 63, or it's probably more than that now, million ADA threshold. That maximum threshold saturation figure, when it hits 100%, above that point, the staking rewards for everybody participating in that pool decrease. So they're not earning quite, it's not hitting that 3% earning rate above 63 million staked to the pool. So you're always looking for a pool that is sort of within that 100% saturation level.
It's a diminishing rate of return beyond the 100%. 63. All right, great, got you.
Yeah. Now we're on to the metrics that I, as a pool operator, actually set. So this is the margin that I've decided I need to earn to run the pool. So that's my reward, effectively. So 2.9% of all staking rewards earned by everybody staking to the pool gets allocated to me as a pool operator. So the whole, if for that epoch, the whole staking rewards are 2,000 ADA, then I'll be getting 2.9% of that as a reward directly to me, which I then use to spend on the servers, on the bandwidth that's needed to serve the blockchain. And everybody can set that, every stake pool operator can set that rate themselves. So when you're looking to decide on a pool operator, look at their margin, see what it's at. There are several 0% margin pools out there that you could take advantage of. So effectively they're saying, we'll run this pool at less than cost, with the hope that we get, there are the big holders of ADA themselves, so they can just earn from their rewards and use that to fund the infrastructure, or the people are mostly doing it to look as attractive as possible. So there are 0% pools out there if you're interested. There are
so
also...
then just on that point, Jonathan, so the 2.9%, is that an API? Is that a total cost for the project duration? And then also, how is it spent? So again, sorry, if I'm missing the obvious. So if you're going to go and physically buy a piece of hardware in the form of a server, or you're going to pay for bandwidth for a period of time, are you paying for that in pounds, in dollars, or in ADA? And is the supplier receiving ADA to provide that service?
Great question. So at the moment, there are no hosting providers that will take ADA for their machines. Um, but in fact, that is changing. So Fluid 7, which is the web agency that I run, you can actually pay for part of your hosting costs. If you take a server or a web hosting from us, you can pay for that in ADA. The bulk of servers running the blockchain around the world are being paid for in fiat. So that will be local currencies wherever those servers are based, mostly in dollars. So Amazon, I think, is the largest hosting provider for blockchain nodes for the Cardano blockchain. And again, that's an important decentralization metric to look for. We don't want everybody running on Amazon, because if Amazon get coerced into manipulating the chain or something, or pulling all their servers at once, and that decreases the ability for the chain to operate. So you want decentralized hosting providers as well. But most of those will just be accepting fiat for running those servers. So as a pool operator, at the moment, I run my infrastructure on Amazon. So I get my staking rewards in ADA. I will then periodically take some ADA, convert that into fiat, and pay my hosting fees with them. And that's how that typically works. And that 2.9% figure is it's a rate. So all the staking rewards earned by Fluid Pool, 2.9% go to pay for my infrastructure costs. And within that,
yeah, go for it.
Within that, if we hit 63 million ADA in terms of ADA stake to the pool, and I'm taking 2.9%, that's obviously going to be a lot more ADA being given to me than while we're a small pool. So I'm 2.9% of staking rewards for 1 million ADA is much less than 2.9% of staking rewards for 63 million ADA. So a big pool makes more money, and they're then making profit within their pool. So again, as you're deciding which pool to stake with, you can go for maximum returns, but it could be like a 1% pool that's saturated 100%. And so you'll be getting the same rewards as you would from a small pool, but they'll be making a lot more money. And so when you're thinking about decentralization, distribution of wealth again, which is important for the network, stake with a small pool is what I would encourage, because you're getting the same rewards, but the operator is now being funded. A new operator is being funded in the ecosystem to keep the infrastructure of the network distributed, decentralized, and in multiple people's hands rather than in a few big entities running saturated pools. You had a question?
Yeah, I do. So thank you for that. And I mean, I'm learning a lot here. So the questions are kind of driving that. And I mean, I would imagine an opportunity, a really good business opportunity here would be to set up a hosting infrastructure type business that would be remunerated in ADA, and to service the ADA decentralized network to some extent.
Yeah. And so that's why Fluid 7 is accepting ADA for hosting fees. And we're just doing web hosting at the moment. We're not actually hosting any dedicated servers for anybody, or hosting any blockchain nodes other than our own. But that's certainly a possibility, and there are other people out there doing it. So there's a thing called staking as a service. So if you do want to be running a blockchain node on Cardano, and you're not too concerned about decentralization of the network in terms of one individual running one stake pool, you can take on the services of a staking as a service provider. There's a good one in Europe, Loris, who's been very helpful to the ecosystem. He offers the ability to manage the nodes on your behalf. So you can set up a stake pool, you pay him to run it. He has control of the keys. So if there's a problem with him, then that's all the nodes he provides. There's a problem with all of those nodes at once, which is sort of one of the risks of using staking as a service. Or it's not risk; it's it's a diminishing optimization of the decentralization of the network. That's probably as harsh a term as I'd call it. But yeah, that's one of the decisions you can make. So having a provider who just offers blockchain nodes, most of those are in the sort of the builder space, a DeFi space, rather than in the stake pool operator space. So we've got Go Maestro, who offer hosting host nodes for people, and you can run just access their APIs. TX Pipe does it as well. Demeter Run is their node hosting infrastructure. Blockfrost is probably one of the largest ones, and they offer again APIs or nodes that you can run blockchain infrastructure from. So those are all big providers, and they will accept ADA as payment. But yeah, certainly having a pure ADA-based ecosystem is one of the directions that we're heading towards. The more people offering and accepting ADA, the more it's going to be an attractive asset for people to acquire. And again, that sort of thing that's driving the native token space within. So you've got ADA as a primary, and then you've got multiple native tokens. And so these native tokens are growing and earning value in and of their own right. Like World Mobile Token is running mobile network communications infrastructure around the world, and you can earn their World Mobile Token, WMT, by operating a node or using their service, staking with their pools. And those WMTs are getting more and more valuable over time as that network, that mobile network grows. So I think I've seen, my WMT is worth 20 times as much as the first lot I ever bought. So again, these are sort of the areas of high growth, high risk as well, but areas of high growth that you can get out of the blockchain space you don't see elsewhere.
Thank you, Jonathan. That makes a lot of, well, starting to make sense, let me say. Thank you.
Yeah, it's all a matter of just it's learning by osmosis with blockchain for me. You sit in spaces, you hear this stuff, and you'll understand it 6 months down the road rather than straight away. But it's all adding to your knowledge.
So this pool.pm, so if you zoom out or scroll down or whatever, is this, so as a percentage, Fluid 7 is what percentage of the total stake? And is this representative of the entire ADA staking pools, let me rather say?
So there are about 3,000 stake pools all running, and certainly the way that the parameters on the chain set up at the moment, 500 of those will be running in healthy profit. So that means that there are 2,500 pools who are running at break even or lower. And so it's that's the sort of the worth that people are seeing in the Cardano blockchain. If you can attract 3,000 pool operators, most of whom aren't running at a major profit, then there's some significant value in that chain that people want to be a part of. So that's a good indicator of the chain's health in and of itself. But as a pot, you've got to look at the whole staked amount of ADA across the board. I don't know those figures at the moment off the top of my head. Good place to look for those sorts of stats are C Explorer. So Pool.pm is a blockchain explorer. It's a way of looking at the blockchain that I think is really nice. C Explorer is another one that does a really great job, but much more technical and less slick UI certainly, but do a great job. So on this decentralization tab, which is where you can get some stats about the health of the network in particular. This donuts set of charts are set up and arranged by Daniel Rebar, who is the project. Actually, I don't know his full official title within Project Catalyst, but he's kind of the head honcho in terms of public-facing project management of the projects. I think product owner is Chris Baird, both great guys in the ecosystem. But Danny has been a stake pool operator in the past. I think he still runs his own pool, keeps quiet about it because he's part of project, fully paid up member of IOG, part of Project Catalyst, the Project Catalyst team. But the stats here are great for looking at decentralization of the chain. So here we see distribution of stake pool operators, looking particularly at multi-pool operators. So this portion here represents the whole number of individual stake pool operators. Everybody else outside of this portion of the pie chart are running more than one pool. And so the more number of single pool operators you have, the more decentralized, that's the sort of the one pool operator, one individual human or one company is the most decentralized you can get. When you're starting to get multi-poolers, that sort of brings that figure down a bit, but still we're in a really healthy state. Yeah, so the breakdown of this pie chart, one-to-one single pool operators are the best, obviously, but these other guys, multiple operators or businesses with more than one pool or projects with more than one pool, they start to make up these other portions. And then we've got some what I consider to be rather scary large entities running lots of pools, and those typically are exchanges, so centralized exchanges. So Binance is the one you're probably most familiar with. They're running 92 Cardano stake pools, each of them, saturated. Actually, they doubled the number of pools because they thought K was going to change. So they're not all saturated, but that's a billion ADA they're holding in those pools, and they have all the same power capabilities within the ecosystem as any other pool operators and ADA holders. So they've got a billion ADA they control, so they can use that to vote how they want if they so chose. Fortunately, they have stayed out of Project Catalyst and things like that to date, as far as we can tell. But yeah, that is one risk factor to the chain that I'm not comfortable with, and I wish people would talk about more. There should be some kind of differentiator between large, massive holders and small holders in terms of voting power in particular.
So could you maybe just unpack that a bit more? So if you take someone like Binance, you're saying that if we look at a number of 4.53, is that them as a percentage holder of the total ADA available? Is that one example of what we're looking at?
That's their portion of the total ADA staked. So
and that would give them and that would give them 4.53% of towards a vote. If they wanted to swing things, that would be their influence in the ecosystem.
Yeah, exactly. So every ADA holder is eligible to vote if they are staking. So there's lots of ADA in the world that isn't staked, and they don't have any votes. They don't have any say. But once you're staking, then you can use that wallet to actually vote. And so yeah, if Binance decided to get involved so if they joined Intersect, which is a members-based organization, and were then eligible to participate in protocol parameter changes and things like that, which is the intention of the MBO, then they would have a really large voice in this space. And with that in mind, everybody that is using the centralized exchanges like Binance to stake, they're actually removing staked ADA from the decentralized portion of the chain, and they're aggregating it in towards a single huge player all the time. And so that is why I really talk about staking with an individual small stake pool operator as the best kind of staking, because the more people we have involved, the more individual opinions are being voiced who are not growing their power beyond that 63 million threshold as it was designed. The less people in the world like Binance and Avengers, I think, is another wallet provider. I'm not sure if it's the Exodus wallet or something like that, but yeah, I don't got that right, but yeah, or it might be Coinbase even. Anyway, those pools are run by a single private company, and a single private company can be coerced by its nation state, by its government into, making some decisions around data privacy or pulling network capacity at various points in time. So we do want decentralization, proper distribution of network power. And so these are the donuts then going into other forms of breakdown of that power that's within the network.
So is there one that shows us decentralization versus centralization?
Uh, these are all sort of talking about various ways of looking at decentralization. Decentralization is quite a hard thing to pin down, and there's no, single figure that everybody trusts that defines decentralization. There is the Nakamoto index, which is what's generally touted, and so that figure, Cardano does very well on, but there really needs to be an independent metric that everybody can adhere to, and so that is being worked on at the moment by Edinburgh University, with their EDI, Edinburgh Decentralization Index, and within that, there's going to be a whole load of academic research done, metrics pulled out on blockchain decentralization, and that will give us a sort of good figure on how decentralized any particular blockchain is across a various, field of metrics, because it can be on, individual cookies destroying the internet. Individual opinions are determine decentralization by different methods. So it could be, single pool operators are what you define it by, or it could be distribution of servers around the world. Could be another way of looking at it. And if they're all in the United States, that's not really decentralized. It could be that actually you don't even rate proof of stake, and you want it to be a proof of work network. That could be important in your terms of your decentralization understanding. But all these factors play into it, and there's a whole load of work being done on producing one source of information around it all. This Nakamoto coefficient is one metric, and then there are several others being worked on. Shannon entropy, and what's interesting is that this one makes Cardano look phenomenal in lots of different charts. Actually, I don't know what this drop down was. The Nakamoto coefficient moved down from leading to midfield, low bottom end of the field. But then there's a Gini coefficient. Cardano is this light blue one, by the way. Shannon entropy, and I don't know. You'd have to go in and read about these to understand them. Dogecoin does very well on that one. It looks like the Herfindahl-Hirschman index, but I think it's this one at the bottom. Tau decentralization. It certainly has had a lot of respect lately. But yeah, actually, this has changed quite a lot. So I do need to get my head back into this dashboard and see where the research is going. But certainly,
You'll share this on the group on the Discord.
Yeah, I'll drop this link in. Certainly, in terms of consensus layer, then this is Cardano's, Ouroboros protocol, how it performs over and above Bitcoin and Bitcoin Cash, Dogecoin, Ethereum, Litecoin. It's just in a league of its own in terms of the Nakamoto coefficient when looking at the consensus mechanism itself alone, rather than the blockchain as a whole. And again, does is an outlier in all these fields, really. Did extremely well. Right, I'll pass that on to you, and you can have a look. So whilst the recording ran out of drive space and we were chatting offline, there were some interesting topics picked up, including Bitcoin and what the best store of value is as a cryptocurrency holder. And I agree, Bitcoin is the best place to get started as a digital currency investor. And Bitcoin is the largest market cap, holds the most value currently, and is the most stable. All the alternative coins to Bitcoin kind of follow in its wake. As Bitcoin moves, the rest of the industry moves, and it's very rarely the other way around. When the bull run is in full swing, then the altcoins actually do far better than Bitcoin does in terms of accruing value. But that always comes back down to a more level playing field in the bear cycle where Bitcoin does better. So overall, long term, Bitcoin is a good store of value, the best store of value currently. We were talking the bits at the end there about technology, how it moves, and that there are always waves, and a technological leader will stay at the tip of a wave for a period of time, but then will always drop off to newcomers. And as the technology evolves and develops, then that will change. And we're starting to see that sort of change, that challenge happen. Bitcoin is a UTXO based blockchain, which was a genius move on the part of those developers early days. Cardano is a UTXO based blockchain. Dogecoin also is a UTXO, Bitcoin Cash, etc. Ethereum is an account-based model. Blockchain uses the Ethereum virtual machine, and lots of other chains that are based on the EVM machine are following Ethereum's model. In my opinion, that is not bearing out to be the best approach, and the UTXO is actually a far better approach for running a blockchain. And we're now seeing Cardano development teams who've worked with extended UTXO really understanding the power of UTXO itself and taking their technology that they built out on Cardano and applying it directly to the Bitcoin blockchain. And so that's where the largest areas of innovation within Bitcoin now are coming out of the development done on Cardano. So we've got runes, which are Bitcoin ordinals, which are like NFTs for the Bitcoin space. And that's coming out of a sort of manipulation of the blockchain, of the Bitcoin infrastructure, and the Bitcoin maxis are trying to shut it down so it doesn't work anymore. But innovation is what innovation is, and it will always bear out. People want NFTs, and they like Bitcoin, so they want NFTs on Bitcoin. So runes on Bitcoin are ways of doing that. And so Fluid Tokens, which is a team building on Cardano initially, have totally converted their technology, because it's UTXO based, over onto Bitcoin now, and you can see that they have new products being released on Bitcoin all the time, and they've just included Dogecoin now as a way to run their tech as well. So this platform here from Fluid Tokens.
So while that's loading, Jonathan, so when you talk about UTXOs, is this essentially why certain ecosystems or not exchanges, certain networks can trade with other networks because they're the same network technology versus others can't? Is that right, or is that something else?
That's a large portion of it. It's certainly easier to go from a compatible chain in terms of base layer technology. So Cardano built an Ethereum virtual machine so that it could directly interact with apps on the Ethereum blockchain. And there are hundreds of Ethereum clones that all offer all the same features as Ethereum, but with lower fees, faster transactions. Like the Binance Smart Chain is an Ethereum-based machine, and so it's just taken the Ethereum technology and used it for itself. With Bitcoin and Cardano, Bitcoin did that UTXO technology first, and then Cardano has extended UTXO. So we've got the ability to have native NFTs and native tokens outside of Bitcoin, outside of Cardano, running on chain. We've got native scripts. So all this sort of additional technology is based on extended UTXO. So we have a whole load more utility than Bitcoin does, but all the same security and a surety of robustness. Mathematic proofs have gone into making provably secure apps on Cardano. And Bitcoin doesn't have any smart contracts, doesn't have the ability to really interact like that. So there are some innovations that are coming about in Bitcoin, like ordinals, but that's really the biggest thing that's come out of it for a long time, and they're trying to shut it down. So the ordinals market is growing despite some people's Bitcoin maxis opinions, and that is now a feature that there are other development teams that are excellent in. And so they're going to lead the way in terms of growth of Bitcoin in the ordinal area, certainly. And you can have swaps and so forth of your Bitcoin to other tokens now, all happening from ADA technology, which is kind of mind blowing, but great to see. So we did touch on Michael Saylor as well, and his opinions on. So he said that altcoins are useless, will never be worth anything, that they would never get regulatory approval, that Bitcoin is the only true commodity in the digital currency space, commodity, mixing those terms up, but and that's been borne out in the courts now in the States and proved to be wrong. So Bitcoin ETFs were launched, and within the same year, same quarter, Ethereum ETFs were launched, and that just opened the gates up for Solana and Cardano ETFs down the road, I'm sure. So yeah, Michael Saylor is a maxi on Bitcoin and has some good valid opinions and is a very shrewd investor, but is his bags are all tied up in Bitcoin. He never wants it to be superseded by the next generation, the third generation of blockchains, like Cardano, Solana, Algorand. These guys are really leading the way now in terms of innovation in the space, and innovation always outpaces the legacy industries eventually. So it is only a matter of time when my recommendation will switch from being Bitcoin as your best store of value in the cryptocurrency space to ADA, in my opinion, or another. But certainly, yeah, the direction is always rolling over of the old dogs, the old guard. Cool. Did that cover? Did I pick up on all the points we
Yeah, nice,
brought in offline?
Yeah, just contrary to your comments, it appears you can do more than one thing at once.
Partially, yeah. I think it's a talking. I can't do talking. I can listen and do stuff, but I just can't talk and do stuff. So I touched on the Chang hard fork. I wanted to do an update on OrcFax. OrcFax is an oracle coming to the Cardano blockchain that is particularly picking up on the decentralization requirements we need. That will be taking sources of truth from multiple places, aggregating them and storing them on chain. The only other people doing that at the moment are Charlie 3, and OrcFax has some advantages over Charlie 3 in terms of the way it does it and the confidence in the results that we get. Oracles are crucial to the development and growth of the blockchain as a whole, but particularly in terms of DeFi, decentralized finance. Most of the Oracle feeds that come in at the moment are around price. So, for example, OrcFax will be taking its ADA, or is taking its ADA price from Kraken and Coinbase exchanges, as well as a few other points, and making sure that the price it posts is an aggregate of those values, an average of those values, and that gets recorded on chain. Whereas if you're just running from a single source of truth, if that has a blip, a glitch, the price massively pumps or dumps, then that will flow into the DeFi ecosystem and liquidate a whole load of trades or loans, positions, and that can cause massive damage to a community's trust in an ecosystem. And so getting a really good oracle is important. Fluid Pool is a holder of a validator node, so we'll be able to hold a validator license. We will be able to run a node, and we'll be running one of the incentivized testnet as it rolls out. We're going through onboarding at the moment, just waiting for further instructions, and then we'll be running a node. As part of our node running, we will have the opportunity to grow our bonus rewards. It's an incentivized testnet, so running a node lets you earn from it, and depending on various factors, how long you got involved, how much you have staked with the protocol with the FACT token, and will determine how much of a bonus you earn while participating as a validator in the incentivized testnet. And so our entry is number 33. We can see we're near the top of the charts now. Maximum bonus reward you can get is 35%. We're sitting at 31.45. I think I offered everyone to join who wanted to participate more. FACT tokens could join in. And I think I added in additional 400,000. And so that's been raising our bonus multiplier from about 27%, I think it was, up towards that 35. So we're getting the extra benefit out of it bit by bit now. And so when the incentivized testnet actually starts, this will stop going up, I think. So whether we hit that 20% in this particular column or not, we're maxed out the other two. We'll just see it's a matter of time. But yeah, I wanted to update you on that. So we're looking like we're going to be having maximum opportunity to earn our returns and our rewards from that opportunity for everybody that is involved.
How do you participate, Jonathan?
Unfortunately, that opportunity is closed now. So I do occasionally run opportunities to long-standing stakers to the pool who are involved, get into these calls, and it's kind of have to be aware to get a chance at that opportunity. So it was before you started joining the calls, unfortunately, Gary, but you certainly will be eligible. Get yourself involved in anything else I do next. So that opportunity to be an early stage investor in helping Fluid Pool run an Oracle node is closed, but there will be ways you can benefit you will benefit from it still as a long-term stake to the pool. Then we will be offering FACT tokens as a reward, as a staking reward for being in the in Fluid Pool, and so you'll benefit from that. And there will be an opportunity. So once the incentivized testnet, I think we've said within this opportunity we run for 12 months. Once that 12 months is over, we can change up the parameters and see if anybody else wants to get involved. If it's still something worthwhile continuing to run, there may be another opportunity then to get involved. And if you're in and around, there are other things that I look for collaborators on every now and then. So that could be something that we do. In fact, one thing I have been thinking about is that once Fluid 7 is eligible to mint USDM tokens, then it would be useful, particularly as Fluid 7 runs offers hosting and paying people to pay ADA for their hosting contracts. Then it'd be nice as Fluid 7 to be able to convert that into USDM quickly and easily, and so having a store of USDM and make payouts and so on and so forth to people who are participating in any Fluid Pool activity in USDM as well as in ADA. It would be useful to have a pool of USDM, so it could be then maybe we build up a treasury of Fluid 7 USDM that we're earning yield farm rewards for, and so it could be that there's an opportunity there for people to get involved in helping me to mint some USDM. And the sort of threshold for being able to mint USDM at the moment, you need to be able to purchase mint a minimum of $10,000 worth of stablecoin. And so whether I want to find all that myself or whether that's a collaboration we do within Fluid 7, we'll see once I get through the onboarding process, KYC and AML. Good. So that's an update on oracles, on AltFax. The last bit of news I had was that there's a new DEX aggregator that I've started using. So a DEX aggregator takes price feeds from multiple exchanges. So MuesliSwap, MinSwap, Wing Riders, Sunday Swap, all of those exchanges. Axo Trade now is another huge one in the space. You can go directly to those platforms to carry out swaps and trades and so on and so forth. or you can go to a DEX aggregator like Ada Markets, DEX Hunter, and now this new one, SteelSwap. And you can have one user interface that aggregates the best prices from across those decentralized exchanges to route your orders through those exchanges from one user interface, depending on which one is offering the best price at the moment. So very good if you're looking at arbitrage opportunities, using an aggregator like DEX Hunter or SteelSwap will pretty much every time find you the best price available. And so that's a very useful thing to do if you are participating in DeFi in particular, making swaps regularly. Then using an aggregator is a very useful thing to have as a tool in your wallet, in your tool set. So this is the swapping platform. Fairly young still, so it's only had 400 unique wallets actively use it. They've traded 8, nearly 9 million ADA through this this user interface. Interface is pretty slick and nice and simple. And the one thing I like about it most is that it actually gives you, in fact, let's have a look at USDM. So if you wanted to buy some USDM, $14, 14 A's worth of USDM will get you $6 of USDM. And you can see that the best DEX for carrying out that swap is Wing Riders at the moment. And so it's giving you this nice chart of how it's routing those orders. If you were having a big order, then it may make more complicated decisions. So it's just switched to using MinSwap for that swap rather than Wing Riders, because MinSwap has a larger liquidity, and which means you'll get less slippage in terms of the price quoted and the price actually delivered when you're carrying out a swap. So it's doing some mathematics on your behalf. It's doing some market research to find the best provider, the best trades out there, the best orders in the wings of the order books, DEXs, to see which is the best opportunity to take for the particular swap that you're doing. So it's small amounts will go by Wing Riders, and then anything larger than a certain figure will go through something that's got larger liquidity like MinSwap. And that sort of mental gymnastics is something you don't have to do anymore. Now, you might just decide, oh, I'll just go to MinSwap because that's got the best liquidity across the board. But you could be losing out on, capital efficiency when you're making your trades, unless you're using something like this. And what I've found actually is that for a lot of trades in recent terms, particularly for certain tokens, not that I trade SNEC, but SNEC, I think most of the volume of that actually goes through AXO. So, if you're trading a decent amount of SNEC tokens, then AXO is the one that it will use. But I thought it's a nice interface. It's informing you well on what's going on. It's very good exposure in terms of the fees that are involved in each of those different trades. Figures are updated extremely rapidly, so it's a really slick UI to use, and is a very good tool. So I've done a couple of trades recently on that, and of course my longer standing DEX aggregator that I do most of my swaps on, and most of the Cardano ecosystem actually does most of its swaps on now, is the DEX Hunter app. So here they've got much more, much less simple user interface. But yeah, depending on what you want, information you need, this can be better in some scenarios, or to be more informative. So swapping hunt tokens, like this example, again, based on how much you do, will show you how much slippage you'll get from whichever exchange. And so this is being quite informative in terms of how risky that trade might be, based on the DEXs it's used and whether it's possible to do it. So you can't even, it can't find a DEX that will let you do 1,000 ADAs worth of hunts at the moment. Actually, no, it's saying MintSwap, so you can go that route that via MintSwap, and again you get a breakdown of your fees and so on and so forth there. What I like about DEX Hunter is that it does this, but then also shows you the charts, so you can see historic price. So whether you're in a good period, a low time to buy in, or a high period to sell out, can be pulled straight from the charts here. So yeah, depending on what you're looking for in your user interface, this is certainly very good if you know you're just going to swap at this point in time this amount, and you want the swap to go through. If you're actually looking for information on whether it's a good time or not, then Dex Hunter might be a better user interface still. Pros and cons. This is why it's good to have a diverse ecosystem with lots of tools, lots of people building, because you get some needs met with one that are better met by others, and yeah, just variety is always the best route to efficiency. Yeah. And
are you essentially needing to have your wallets installed with each one of these to obviously pick up funds available, or is this more just I mean, how would the transaction conclude at the end?
so each of these are decentralized applications, and so they will interact with a decentralized wallet. And yeah, when you first hit the app, you do need to sort of grant access. So here, for example, if I disconnect the wallet, and in your like Eternal wallet, I've got installed as a browser extension. So if you want this wallet to interact with the DApp that you're using at the moment in time, then I've got my wallet installed as an extension, Eternal, this icon here. I've also got, so this browser is one I use only for cryptocurrency transactions. I don't do any web surfing or anything like that in it. Try not to. And so I have my wallets installed on here, and that's where I'll do my interactions with the blockchain. So I've got Lace Wallet and Midnight Lace Wallet as well. And Eternal is what I do day to day for the Cardano mainnet. And I can switch on my DApp connector, which means that I will now let this browser extension talk to decentralized applications, other websites with this wallet. So this wallet now with the green plug on is one that will be talking to an app like this. And so when I click connect wallet, I can choose what I want to interact with, and that will then be able to read the balance, the address. It will be able to form transactions all from this app. The restriction comes that this app can't sign transactions. It can only pop up a window from the extension itself with the transaction fully formed that then you can sign. So in a similar way to MetaMask works on Ethereum blockchain, for example, this works here with browser extensions. But in contrast, there has been no wallet hacks on Cardano at all yet. There have been vulnerabilities found and reported before, and there's been inaccuracies, and there have been wallet drain attacks where spoof websites have fooled you into connecting your wallet and signing transactions, but not being a legitimate website. But there have been no technological breakdowns in the infrastructure of Cardano and its wallets so far. So yeah, a very safe ecosystem to be interacting with. I've got so much more confidence playing with dApps on Cardano than I do with any other chain that I rarely leave the ecosystem now. There's opportunities here to make returns on my investment, so I would do them. I'd rather do them in a safe, secure environment like Cardano than risk maybe higher returns elsewhere on other chains.
Amazing, thank you.
Yeah, so that covers all my set topics. Can do a couple of minutes of conversation of questions if you want to. But if all our ears are tired, we can wrap that up there. Next week, I'm actually going to be traveling, so I won't be holding Cardano Q&A on Friday. But
Oh, it's you, Paul, to handle for us.
Yeah, Paul can take over if you want.
It'll last all of about 30 seconds.
I doubt it.
You sell yourself short, Paul. You know your stuff. In fact, one thing I did want to touch on, in fact, if I made time today, was our favorite game, Machiavellic. They did a sneak. In fact, I might be able to find it quickly. They did a sneak teaser video of some of the gameplay that's coming whilst we're on our journey to Ozark. So if you've got a officer pass, a Machiavellic NFT, you can lodge it into your cryogenic chamber for its journey over to the planet Ozark. And on the way, we're actually being given some gameplay too. So they're creating some mini games while we're in these cryogenic chambers, where you can actually battle with other cryogenic chambers. And they did a really cool little teaser video showing some of the gameplay that's coming. Don't know if you've seen this yet, Paul. I quite liked it.
No, Jonathan, first time.
First time I've not seen it. Okay, don't think it's that one. They do some cartoon content as well. It's coming out, which looks really slick. But the video is this one. So in these cryogenic pods, that's one of these little blibs. There's an individual NFT from a wallet stored in there, and then there's going to be like these big. It looks like an old naval mine floating around inside the chamber, and each of the pods has got 2 gun turrets and can do some target practice against this mine that's floating around. So they've alluded to nothing further than just this little video so far. I did hear a bit more in some private calls, but I don't want to give any more away than the official team does. But yeah, this gameplay is looking like it's going to have a first person perspective, and it's probably just target practice or something like that. But that will, I'm sure, lead out into being able to battle with other players over time. So yeah, some cool 3D gameplay starting to be shown out of this game. Yeah, little bits like this make the long wait as these teams are building worthwhile. So it's great to see some bits coming out of this team, because we've been fans for a long time, haven't we, Paul?
Oh yeah, we followed it for a wee while, Jonathan.
Yeah, it's been at least 2.5 years, I reckon.
Easily.
Good. All right. On that happy note, I think we'll wrap up the call. Thanks for joining.
Thank you so much, guys.
My pleasure, Gary. And
Thanks.
safe travels, Dinesh. I'll catch up very soon, Barbara. We've got some exciting things going on with Barbara. But yeah, I'll see you all soon. All right.
Awesome. All the best. Take care. Cheers.
Bye-bye. Bye.